Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week, we're lucky enough to have Peter for another chat. He's a business broker from ABC Business Sales. And we're just going to shoot the breeze, see what comes up, maybe talk about some exit strategies and things that you need to know when you're selling a business.
So Peter, we're just going to kind of fire you questions, kind of go back and forwards. We're going to see where this lands. For those who haven't seen the previous episode around the myths, make sure to check that out. Peter Nola works for ABC Businesses. He sells businesses. So first question, Peter, why do people buy a business?
That's actually quite interesting. I guess if you want to think about it logically, we make dreams come true for people as a business broker. So what we do is we allow people to retire and just enjoy themselves after all that work. And we let other people buy a business to fulfill their dreams. So they generally buy Disney. A business because exactly. Just call me Walt Disney. It's to fulfill their dreams, essentially. They want to build a better life for themselves, their family, their kids, and they're probably sick of working for the man as well, if the truth be known.
And when people are buying businesses, do you sometimes see them actually going into that transaction with a little bit of blinkers on in terms of the amount of work or the amount of, I guess if I look at it compared to a housing investment, which is, I hate the word passive, but a relatively passive investment compared to a business, do you sometimes see people go in and they just underestimate the amount of work and grind that they have to put in? Or
Sure. No, that happens a lot. But then nobody buys a business off someone if they don't think they're smarter than the person they're buying the business from.
That's a very good point.
They sit across the table and they go, if he can do it, I can do it, so I'll buy that business. So they don't know what they don't know, so they do tend to go in a little bit blinkered. But, if you pay $1 million for a business, there's a million reasons for you to get it right in the next few months, and very rarely do they fail. From memory, and I might be wrong, but I think our internal statistics, and we monitor the businesses that we sell, I think there's a 98% success rate on businesses that we sell in terms of people still trading 2 years from the day they buy the business.
I mean, Lighthouse Wealth has been around for a couple of years, and I can say by far it's probably the hardest thing I've ever done, the most enjoyable, but the hardest thing, and I've learned.
Corporate fight night is dropping down the list, is it, mate?
I tell you what, those 3 rounds, longest 6 minutes of my life. For those who, we won't get into it. Ask us about the corporate fight night another time. Mike in the second round does not go well. So I found this much harder than I probably thought it would be. So 98% success rate. When you catch up with people kind of 6 months down the track, is that even if it's going really well, is that common? Do people know what they're getting themselves in for?
Sounds terrible, but I generally don't want to ring them 6 to 8 weeks after they've bought it.
Yeah.
Because if you imagine your first day of school, and you arrive and you're there and it's like, whoa, all these things are going on, and what have I let myself in for? Well, the poor old business buyer is exactly the same. So it's best to leave them to sort of bed in for a couple of months, and then you talk to them, and then, generally they're fine. I mean, I've had a few that will ring me 6 months later and go, I've made a mistake here. I shouldn't have bought this.
Yeah.
But then I sell it for them again. So it's not really a problem.
Yeah. And, I guess to go to the polar opposite end of that, people go into businesses to work for themselves, get more spare time, free time, weirdly, different type, diversify their income, a whole lot of different reasons. I think probably the one thing we can all agree on across the table, though, is most people don't have an exit strategy for the business. And I think that's something really important that people don't talk about is, how am I going to get out of this business, especially if you've gone in with partners, with family, with friends, with something like that?
Yeah, absolutely right. It's amazing how many people have no idea how they're going to leave, which strikes me as odd, because if you're going to drive from here to Hamilton, you're going to follow a roadmap, aren't you? You're going to follow a plan to get there. You don't just aimlessly get in the car and drive. And people are the same in business. They simply don't know how they're going to exit. And they ring me up and they go, what's it worth? And I go, well, it's worth this. Oh, is that all it's worth? Well, yes, but if you do this, and this, it'll be worth a lot more. And you get a variety of reactions to that. Some of them just throw their hands up in the air and go, I don't care, sell it anyway, I've had enough. And others will well, others will follow the plan. So yes, exit strategies, it really does amaze me why people don't have an exit strategy.
So on the exit strategy piece, 2 questions. First one, when people sell, why are they selling? I know everybody will sell for a different reason, but is it usually they're done with that particular business, they're tired, they're thinking about retirement? What kind of camps would you put people into?
Yeah, so at the moment, we're seeing a lot of boomers out there and they're moving out of businesses and COVID and things like that have delayed a lot of exits over the last sort of 4 years.
Yeah.
So we're getting a fair few boomers through and they just want to go to the holiday home and do nothing, and that's fine. But the younger people, they're generally selling up. So a bit like a house, you know, you'll buy a house, it'll appreciate in value, so you'll sell that, you'll buy a better one. And a lot of them do the same with businesses, or they've simply had enough. They don't want to sell widgets anymore and they want to do something else. One of the things that good business owners understand is that business skills are transferable. You don't need to know everything about a widget. You need to know everything about running a good business, but not the product. So if you run a good business, you can generally sell that, move into another business and apply those same business skills.
Yeah, that's funny. When I in my family, we've got, you know, a few business owners and that sort of thing. And if I look at the businesses that my dad has run, it is a case study in you don't really need to know too much about what you're selling. It's about the numbers, the cost, these sort of things. Like it has been trucking, oysters, cosmetics, engineering, like just fully across the board. What does cosmetics have to do with oysters? Absolutely nothing. Intrinsically though, if you know how to run a business, what does it matter?
Yeah. The margins on those oysters, how good. So Peter, for those that are thinking about retirement, my area of expertise, I'm the man with the plan. You say, where are you going? How are you getting to Hamilton? I know how to get to Hamilton. It's not true. Not spending much time in Hamilton. Love to the people of Hamilton. How often do you see business owners going, Peter, I need X dollars. I need $500,000 or I need $1 million because I need that to achieve this other goal, which for the person buying the business is completely irrelevant.
Yep. So that's a common sellers or vendors valuation methodology. So the beach house, the school fees, the motor car and the boat, therefore the business is worth X.
Everything that the buyer doesn't care about.
Exactly right. Exactly. Because that's what they need. And that's where they need a plan. And that's back to your exit plan. That's back to understanding what you're going to do post business ownership and I'll tell business owners, you shouldn't be selling this because you can't do what you want to do with the proceeds of your business and you're not set up. You haven't had a plan. You haven't got yourself into a position where you can sell your business and do what you want to do. And that is more common than what you think.
And we work with people on the business owner side a lot. And I talk to them when we're building their financial plans and going, hey, whatever you get for it at the end, especially for those that have a wild run, you want to make it that the sale of the business is the cherry on top. It's the nice to have. Because if you're dependent on a sale price later in the game, will we have COVID? Will it be a global financial crisis? There's too many variables. So you need to be thinking about, especially if you've got a little bit of a cash cow and there's good money coming from the business. You mentioned, and you should check out our Rich vs. Wealthy episode because you said batch, big home, school fees, all of those things. You need to be thinking about how are you going to take capital and profits from the business over time, put it into assets outside of the business to create more income and capital gains. So whenever you're ready to go and you're going, Peter, I'm tired, I need this to stop, but I need this amount of money to maintain my lifestyle. You don't want to be in that situation.
No, 100%. And too many business owners are. You need to have all the toys, have all the assets, and then come and see me and sell.
Yeah, I think that's another really important point. Just when you're running a business, it is important to take money out of the business. If you leave money in the business, it will get spent on the business. You need to enjoy that. You work really hard for the thing. You need to take some money out and diversify your assets, have some toys, do something that is a reward for the amount of effort you're putting in.
Especially like tax, right? A lot of people go, I'm trying to minimize my tax. I don't want to pay too much tax, so I'm going to keep money in the business, or I'm going to have these expenses. I've spoken about how that impacts valuations in the past. When you do those things, you're not able to grow your wealth over time, and you become so dependent on that number at the end.
Yeah.
Exactly right. Yeah, exactly right. And it's a common mistake. And I guess what happens is business owners talk to the wrong people. And I don't want to bag accountants, but they talk to their
honestly, right.
Can't stand them.
but they talk to their accountants, and accountants are trained historians. That's their whole purpose in life, is to tell you what you did. So they're really good at constructing a set of accounts, paying minimum tax, whatever you want to do, but they're not that experienced in going forward. So you need to talk to someone who knows what's happening going forward and how to take last year's result and give you what you want out of it over the next 3 or 4 years. Yeah. And then you come and see me, I sell your business, hey, it's a good one. Yeah.
The banter of accountants as well, in terms of, just tell you what, difference between a look-through company and trust. I get it, okay? Chill out. We might wrap it up there. This has been a nice little chit-chat. Yeah, I really enjoy this stuff in terms of finding out all about the business. Peter, just before we wrap it up, once again, you've got a YouTube channel. How can people find you if they're thinking about learning more about the subject, or they're interested in buying or selling a business?
So just jump onto YouTube, put my name in, Peter Nola, and my channel should jump up. Have a look at those videos there. Leave a comment. I get back to everybody. Be great to hear from you.
Nice. Okay, thank you very much for joining us. Please make sure to review, give us a subscribe, and we'll catch you next week.
Cheers.